Starter homes, those affordable entry-level homes many Americans dream of, are vanishing from the U.S. housing market. In the early 1980s, these homes made up a staggering 40% of new constructions. Fast forward to today, that figure has plummeted to just 9%. This crisis isn't just about fewer homes being built, it's a perfect storm of rising prices, restrictive zoning laws, and shifting priorities among builders. The consequences? Young Americans are being pushed further away from home ownership, with many wondering if owning a home will ever be possible. But why is this happening? What forces are driving this alarming trend, and what does it mean for the future of the American dream? We'll dive into the data, break down the numbers, and explore how this impacts not just housing, but the economy at large. If you're concerned about the housing market or planning to buy your first home, you don't want to miss this. Before we begin, make sure to like, share, and subscribe to Economy Explorer for more insights. And don't skip any part. There's critical information ahead. Let's get started. Inventory. A starter home is typically modest in size and price, making it the most affordable home option in any market. These homes have traditionally served as the gateway to homeownership, especially for young families and first-time buyers. In the Midwest, a starter home might cost around $100,000, while in high-demand areas like California, it could start at $400,000 or more. Despite their importance in the housing market, the availability of these homes is dwindling at an alarming rate. In the early 1980s, builders constructed between 400,000 and 500,000 starter homes annually. However, this figure has plummeted dramatically over the decades. As you see, Cincinnati, Ohio, leads the nation with a 10.2% year-over-year home price increase, reflecting the rising costs in areas where affordable homes were once abundant. Boston and Baltimore follow close behind, with price jumps of 6.8% and 7.3%, respectively. Meanwhile, markets like Northport, Florida, show a decline of 5.9%, signaling uneven trends nationwide. This shift is illustrated by the shrinking inventory of affordable homes and the heightened competition for what remains available. This reduction reflects a shift in priorities among developers, who now favor high-end single-family residences and luxury multifamily units that yield higher returns. Rising costs of land, labor, and materials have made it nearly impossible to profitably construct smaller, affordable homes. Zoning regulations further exacerbate the issue. Local governments often impose restrictions that dictate lot sizes, building heights, and density requirements, making it harder to build smaller homes. Many zoning laws favor low-density developments, such as large single-family homes, over higher-density options like townhouses or small apartment complexes. These restrictions significantly limit the supply of starter homes, driving up prices and making home ownership even less attainable for many Americans. The result is a housing market that increasingly caters to the wealthy, leaving first-time buyers with limited choices. Without intervention, the dream of homeownership will remain out of reach for an increasing number of people, further exacerbating economic inequality. For young Americans, the dwindling supply of starter homes isn't just a housing issue. It's a fundamental challenge to building long-term wealth and stability. Housing markets. With starter homes scarce in urban centers, buyers and developers are increasingly turning to suburban and rural areas. These regions, historically more affordable, are now undergoing significant changes as demand surges. Over the decades, the number of starter homes built each year has declined from over 400,000 annually in the 1980s to fewer than 100,000 today. This decline, most notably after the 2007-2008 financial crisis, reflects a reduced emphasis on affordability as developers focus on larger, higher-profit properties. Suburban areas like San Antonio and Oklahoma City are addressing this shortage by easing zoning laws and encouraging higher density developments. Areas with less restrictive zoning, like Metro Atlanta, are attracting newcomers due to adaptable policies that promote affordable housing projects. However, the scale of these efforts remains insufficient. Even with increased activity in these areas, the pace of construction has not matched the demand for affordable housing, leaving many buyers competing for limited options. At the same time, rural regions such as Northport, Florida, are experiencing unique market dynamics. Unlike suburban areas where prices are surging, Northport has seen a decline in home values, reflecting slower economic activity and population growth. These contrasting trends highlight the diverse challenges facing the housing market. The migration from urban centers to suburban and rural areas also presents broader economic implications. As populations shift, local governments must adapt to the increased demand for infrastructure, schools, and services. While this influx can stimulate local economies, it also places significant strain on resources, requiring thoughtful planning and investment to sustain growth. Ultimately, the decline in starter home construction is a symptom of broader systemic issues. Addressing these challenges requires not only policy reforms, but also a concerted effort to prioritize affordability in housing developments. Without these changes, the imbalance in the housing market will continue to grow, leaving first-time buyers with fewer opportunities to achieve homeownership. Finances. The financial barriers to homeownership have never been higher, particularly for first-time buyers. Over the past decade, home prices have risen significantly faster than wages, making it increasingly difficult for Americans to save for a down payment. In 2025, the average home price in the U.S. is estimated to be $402,600, requiring a down payment of over $80,000. For many, this figure is simply out of reach, especially when combined with other financial pressures. This table breaks down the costs associated with buying a home in today's market. With mortgage rates nearing 7%, monthly payments for a typical home exceed $2,100. Over the life of a 30-year loan, buyers can expect to pay hundreds of thousands of dollars in interest alone. These dynamics make homeownership increasingly unaffordable for middle and lower-income families, effectively shutting them out of the market. Student loan debt, car payments, and rising rents further complicate the financial picture for potential buyers. Many young Americans find themselves juggling multiple financial obligations, leaving little room for savings. As a result, an increasing number of first-time buyers now rely on outside help, such as parental assistance or down payment grants, to afford their first home. Without these forms of support, the dream of homeownership remains elusive for many. At the same time, we're seeing an increase in all-cash buyers and large-scale investors purchasing homes. These groups often outcompete traditional buyers, driving prices even higher. While these investors account for only 1 to 2% of the overall market, their presence is particularly felt in fast-growing, affordable regions. In cities like Atlanta and Phoenix, institutional investors are snapping up properties, further limiting options for first-time buyers. The rising cost of renting also plays a significant role in the housing crisis. With rents increasing nationwide, many Americans are struggling to save for a down payment while covering their monthly expenses. This creates a vicious cycle where potential buyers are unable to escape the rental market, further widening the gap between renters and homeowners. Addressing this issue requires a multifaceted approach, including measures to stabilize rental costs and increase the supply of affordable housing. Regulation. Regulations at all levels of government, local, state, and federal, play a significant role in the housing crisis. Excessive zoning restrictions, combined with rising construction costs, have made it nearly impossible to build affordable homes in many areas. Builders estimate that regulations now account for up to 25% of the cost of constructing a home. These costs are often passed on to buyers, further inflating home prices and reducing affordability. These areas face some of the greatest challenges in addressing the housing shortage. For example, in cities like Washington, D.C. and New York, zoning laws often favor low-density, single-family housing, which limits the potential for building affordable multifamily units. This creates a significant barrier for first-time buyers and exacerbates the supply-demand imbalance in the housing market. Meanwhile, cities with less restrictive zoning laws, such as Atlanta and San Antonio, are seeing a surge in new residence and construction projects. These areas serve as examples of how regulatory flexibility can facilitate the development of affordable housing. However, scaling these successes to a national level remains a significant challenge. Deregulation is often cited as a potential solution to the crisis. The current administration has expressed interest in reducing regulatory burdens, which could pave the way for more affordable housing developments. However, such changes take time to implement and may face resistance from local governments and communities. In the meantime, the housing shortage continues to worsen, leaving millions of Americans without viable options for homeownership. The issue of land availability also plays a critical role in the crisis. In many urban areas, buildable land is scarce and expensive, further driving up costs. This scarcity forces builders to focus on high-end projects that offer higher profit margins, leaving lower-income buyers with limited options. Addressing this issue requires innovative solutions, such as repurposing underutilized spaces or relaxing density restrictions to allow for more efficient use of land. The path forward. The dream of owning a starter home is slipping further out of reach for millions of Americans. As we've explored, a combination of soaring prices, restrictive zoning laws, and a lack of affordable housing supply has created an unprecedented challenge for first-time buyers. While some regions are taking steps to adapt, the pace of progress remains too slow to meet the growing demand. If meaningful reforms are not implemented, the housing market will continue to widen the gap between those who can afford to buy and those who cannot. But there's hope. Addressing these challenges requires collective action from policymakers, developers, and communities. By prioritizing affordable housing, easing zoning restrictions, and encouraging innovative solutions, we can restore the starter home as a cornerstone of the American dream. Thank you for joining us on this journey through the housing market. If you found this video insightful, please like, share, and subscribe to Economy Explorer. Don't forget to check out one of the suggested videos on the screen to continue exploring these critical topics. And as always, thank you for being a part of our channel.